All right. Hello, everyone. Welcome back to my price action study. Today is November 8th, 9:15 a.m. We had a high impact news driver, which is Fed Chair Powell speaks. So here we are. We're going to go ahead and start down. I'm going to be explaining my analysis. We are currently on the S&P, so we'll begin with our study here. Each of these candles, of course, is a month, as this is a monthly chart. All right, and I do have the monthly range noted here. One thing I also want to mention is upon going through my notes, if it consolidates here, we may expect it to return back to the initial order block before continuing higher. Of course, that doesn't necessarily apply here on the monthly chart, but just something we're keeping in mind as well. Additionally, here we'll go to the Nasdaq. Okay, and so on the Nasdaq, it's the exact same thing. Okay, and we have multiple refined objectives here, but we are currently trading to an order block, and also we are trading into the monthly order block, which is outlined here in the red. And I also outlined that here, which we're trading very close to. So now let's go down to the weekly. All right, and so let's fix this. Okay, so on the weekly, let me minimize that. Okay. So on the weekly, I was noting, any quick movement, and of course I noted last week because we had a lot of displacement last week, and obviously we had this huge candle, so that is a level that is untested and price repelled from, so that is noted for our sell side objectives later on. All right, and as for ES, all right, same thing. We're trading to the order block on the weekly time frame here on ES, and also in correlation with that monthly. We also will again refine something more here on the lower time frame, but as far as with our institutional levels, we are still expecting price to trade higher. I'm anticipating prices to trade higher on both ES and the Nasdaq. All right, so now let's go ahead and get down to the higher time frame chart, which will be the daily chart. And we're going to keep those ideas in mind. All right. So here's that order block outlined as well, and we are currently trading in it. Now, I was noting relative equal highs, and here on the daily chart, we have this high, which was Monday, 18th of September, and additionally 19th of September. That high also from October 11th, created a relative equal high. And so there is liquidity here in the form of buy stops. Additionally, we have to look at where price came from and what it's done. From a consolidation, we're only going to see an expansion, which exactly we saw, consolidation and then expansion to the downside where we actually took these relative equal lows. All right, from here, now there's large money from this low down here, from this level of sell side, moving it to these new levels of liquidity, one of which being the liquidity pools above these relative equal highs. And additionally, here we have a liquidity void, which will be more refined, but you can even see it here on the daily chart. All right, we'll switch to ES and talk about analysis there. It's no different. Okay, we have currently these relative equal highs here, so it's a level of buy side liquidity, and additionally we have a liquidity void above that. So again, the idea here from a consolidation is only going to be an expansion. So what do we see here? Consolidation and then expansion lower, and then from an expansion, we're either going to see retracement, reversal, or consolidation. And what we're currently seeing here is a retracement back into the previously created range, but also a reversal in the sense that we have buy side liquidity here. So I'm currently anticipating higher prices on both of these charts. Let's go down to the 15-minute now, and we'll go to the lower time frame chart that I have, individual charts. I don't actually, no, I actually did do that. Okay. All right, and we're going to start from the daily, sorry, from the 15-minute chart, actually. All right, and so we're going to look at how, let's actually go back to the 1 hour for a moment. Okay. So here we are currently looking at the weekly range, and we can see that all week price has been gravitating towards that, we do have these consolidations right now because this would be high impact because we are trading above these previously created highs, or sorry, this would be high resistance, not high impact, because we are currently trading above these highs. All right, again, we are anticipating price to draw there, but we're just currently looking at the weekly range here. All right, same for the hourly. Now let's go down to the 15-minute and see ultimately what price is doing. So I was talking about power of three, which is open. All right, so you're gonna have the open of the day at midnight. That's delineated by these lines. The open, then this price is gonna trade lower. That's the accumulation and manipulation. And then, of course, they're gonna see distribution, which is gonna be the upside move to close out for the day. And of course, being that we've been seeing all these up close candles, every candle daily so far has been an up close candle, is the same thing. Midnight price trades lower. You would want to enter near or below that. We see it then take out the previous day's relative equal highs. All right. And then create the high of the day. That was yesterday's price action. Today it's the very same thing. All right. We do move above that at the beginning of the day. So here's the New York Open, but then price trades below it, and then we have that aggressive movement to the upside. And now here we are consolidating again back into the move for tomorrow. So there's one other thing that I want to go on because I was finally able to define or get some more clarity because I was using like these monthly contracts when I was looking at interest, but additionally, I have learned something new. So I'm going to go back to my institutional chart and I'm going to be explaining how my analysis of price trading here, which I've been talking about price trading up to those levels or to those highs and then trading lower overall. I'm expecting lower prices. All right, but now we're going to go ahead and go and analyze interest rates, which are the highest impact. And now I have the continuous contract, so I can actually see the differences. All right, now we're going to analyze this on the 90-minute as that's what I learned today. That's what ICT was doing. Okay, and so what we need to understand is all three of these, the 30-year bond, the 10-year note, and the 5-year note, all three of these should be in alignment. So I'm just going to go through them. You'll see the line here. All right. So this one, we're showing weakness. Okay, this creates this high, and then it creates this lower high. All right, this one creates this high, and then creates this lower high. But this one's creating this high, and then creating a higher high. So this is the crack in correlation here. All right, this is showing above here, is showing accumulation in the bond interest rate market. Sorry, this is showing accumulation, and with that, we would ultimately be expecting price to do what this is doing, which is showing weakness or the inability to trade above that previous high. And it's exactly the same thing here. We're seeing that weakness, so we would be expecting price to trade lower here as well. All right, now we're not anticipating that just yet, but overall, that should align with our analysis on the US dollar. So let's look at what the US dollar is doing. As we can see, the US dollar is showing is creating new higher lows, all right? And that is in alignment with this. This is creating a high, a lower high, and continuing lower. Same thing here, all right? And this is showing strength or the willingness to go above a previous high. So what does this all mean? Well, we'll go back to NQ and ES. And below here is the US dollar. The highs marked on a comparison pane. And if you look closely, you can see that these are inversely correlated. So if we're expecting the US dollar to go higher, we would then be expecting the futures market to go lower. And what do we have here? Well, we have relative equal highs. We have a liquidity void that we're going to see price return to in a higher time frame order block with a underlying bearish tone to the market, and just again this very aggressive price action, large money moving price up here. So this is a lot of distribution happening in the marketplace. But we're going to leave it at that. This was a very great analysis, very proud of this, and hope all is well. Bye.